The growth of real estate in the country is linked closely with the growth of organized retail. Today, there are contradictory scenarios which are emerging. One points to an uncertain global economy and a shakeout of sorts amongst retailers, where large domestic players are either consolidating or shutting shop. The other side shows a picture of a glass half full, with 100% FDI allowed in single brand outlets. A number of international brands are eyeing India, and the large growing middle income India, which is hailed as a big growth catalyst for India's retail sector. Our debate today will focus on the retail challenge of India, and we'll uncover how much of a role will it play in the growth of real estate sector in the country. Welcome everyone, and meet my panelists for the debate. Harminder Sani, Managing Director of Wazir Advisors. Harminder, thanks for being here. Vivek Kaul, Head Retail Leasing, DLF. Vivek, you'll bring in your unique perspective. Jaideep Wahi, Director Retail Services. Kushman and Wakefield. Jaideep, thanks very much. And Sameer Jasuja, CEO and founder of Prop Equity. We'll also bring you the views of Lalit Kumar Jain, Chairman and Managing Director, Kumar Builders, and National President, Credai, who I did catch up with yesterday, just trying to figure out what his perspective is. Let's begin with looking at the bright picture first. According to the 2011 FICCI report, India's retail market is expected to grow at 7% over the next 10 years, reaching a size of $850 billion by 2020. Traditional retail, that's expected to grow at 5% and reach a size of $650 billion, while organized retail is expected to grow at 25% and reach a size of $200 billion. That's again by 2020. As India's retail industry is aggressively expanding, great demand for real estate is, of course, also being created. The cumulative retail demand for real estate across India expected to reach 43 million square feet by 2013. That's much nearer. Around 46% of the total estimated demand between 2009 and 13 will come from Tier 1 cities. That's another interesting point we'll dive deep into. Adikani, in its Global Retail Development Index, that's GRDI, 2011 has ranked India as the 4th most attractive nation for retail investment amongst 30 emerging markets. So I'm going to get the first independent view from Harminder. The data that I've read out looks spectacular, but we all know that all's not well when it comes to India's retail, organized retail growth story.
See, the biggest challenge which we are seeing in here is that we are trying to project number out of what we have seen as the trend. The base was much smaller, and we're looking at maybe different estimates, 40 billion, 45 billion, 50 billion, currently going up to 200 billion. So it's not about growing at 25%, because the percentages generally you start getting mixed up a little bit. So it's 40 billion, which we did from a zero base of, let's say, start with around 2001, 2002. It took us 10 years to do around 40, 50 billion. And we are saying we are going to do another 40, 50 billion every 2 years now going forward. So I think that's how it needs to be looked at. The quantum jump which we are looking at, there are lots of facilitators that need to be in place in the ecosystem. And one of the biggest one is the real estate. Why didn't organized retail take up in India? So there's the big question people used to ask me initially when we were talking about retail, organized retail in India, that what's changed? Consumption was always there. Fine, now it's 400 billion, but 350 billion last year or year before that. Why didn't we do that? The issue was always real estate availability. You could count on fingers how many markets existed in Delhi. And now,
is that what you think was the biggest challenge
organize retail? Biggest challenge, that you wanted to do a chain of stores. How will you do it? Raymond's wanted to do a chain of stores. There was only way that you should have such a super brand that somebody who owns real estate in a street in Ahmedabad will come to you and say that I will convert my shop into a Raymond store. There was no other way anybody could go to that store and tell him that change your Ramlal and Sons into a Raymond store or any other brand, anything lesser than Raymond. He won't do it. And there were no international brands who were coming to India that somebody will go and say that fine, I'll open a store, change my store into Adidas store. So that's what was changing. But then the generation changed, and now people are quite comfortable, younger generation, sitting under Adidas rather than sitting under their grandfather's name signboard.
Okay, so you do see a perceptible shift coming, but it's slower than what one would have expected.
One would have expected, because the amount of investment which is required, either on the retail or on the real estate, I think both of them are missing. There are huge gaps. And that's where the $200 billion number out of 850 is not such a big share we are looking at even by 2020. Once we have tasted what modern retail is, if we had the magic wand, everything should become modern retail tomorrow, down to the tier 5 or even to the villages. But it cannot be. So it will take certain time. So capital, availability of space, and the right kind of brands and companies. These are the three things which need to happen.
All right, some interesting data that I'm going to read out. This is middle income India that you talked about, the young generation. I mean, if you look at this, you visit a mall in a metro on any given day, you really don't see any evidence at the moment that anything is slowing down, because at least the ones that you see in NCR, in prime areas, seem to be very, very full and a lot of footfalls. Downturn doesn't seem to have hit them. So let me look at the future. By 2015, more than 300 million shoppers are likely to shop in organized retail chains. Again, figures that you can bust. The growing middle class is an important factor contributing to the growth of retail in India. And by 2030, it's estimated that 91 million households will be middle class, up from 21 million today. Also, by 2030, 570 million people are expected to live in cities, nearly twice the population of the United States of America. And the consumption level is set to double within 5 years to 1.5 trillion US dollar from the present level of $750 billion. So the figures are astounding. There's a growing middle class, Vivek, but you'd hear of stories that even your big guys like Aditya Birla Group or a Future Group didn't get the math right. They went on an expansion spree, and lately we've been hearing of them having to offload stake, and the buyer also is looking at consolidating their business. So is it just a case of growth too fast, looking at it's almost like a top-down approach? Fine, these are the numbers, so let's expand and we'll make money, and that didn't play out?
I think one of the challenges also were the real estate costs. They were considerably higher for the kind of business that the guys were in, and the basic challenge which they also faced was that they wanted to run a Map My India contest. So everybody was talking about 500, 600 stores. Nobody was looking below, how are we going to make money? Let's open stores and then we'll figure out a way to make money. So that, I think, with respect to the real estate cost and then the 500 store story together could not see the light of the day, and that's why they face the challenges.
Jaideep, what's your perspective? Is it just the usual pangs of a growing industry, or too much expansion? And this is pretty much a story of real estate as well, not just retail. I mean, there was a time between 2005 and 2007 when everybody thought nothing could stop India's growth story, and one had to capture markets ahead of any business sense.
So basically, from the retailer standpoint, they didn't want to miss the boat. That was really the thing, and that's where the story came of 500 stores and 800 stores, 1,000 stores. And when you map that with real estate costs and a lack of quality real estate shopping centers, it led to certain problems which now is evident. So really, I would say that we have organized shopping centers in say the top 7 cities, but how many of those shopping centers are really successful? That's a question mark. And so really, shopping centers have been polarized, and demand has been polarized. So
that's another very big thing to discuss in terms of how organized retail is happening. And Harminder said, I mean, you can't expect it to go down to rural India. It's pretty much a tier 1 phenomena. It's restricted to the top 6 or 7 metros. Even going to tier 2 metros is a challenge.
See, I disagree with Harminder on only one bit. I think, first of all, the real estate industry has done its bit with respect to providing real estate for organized retail. We've seen about 240 malls come up, 75 million square feet come up over the last 5-6 years. What really didn't happen was that these developers didn't understand that organized retail required extensive domain expertise, and neither did the retailers understand it. So you have only very few malls that are successful, and there the demand is unlimited, and you suddenly create a lot of real estate through organized retail, but there is no demand over there. And that's why the retailers really suffered, because they could really not understand how to make a mall successful. And if they couldn't make the mall successful, the retail shops didn't do that much business.
Absolutely. People went, ate, came back, but didn't really shop in those places.
Phenomenal oversupply in retail. Rentals are coming down. But yet, the retail industry is still not taking off.
Okay, so we're going to get down to the number crunching a little later, Vivek. What do you feel? I mean, does it worry you when you look at the fact that domestic retail industry has to actually consolidate because of sheer lack of capital, the huge debt in its book? How do you view that as a future for your own retail space growth?
I don't think it is as a challenge, because the brands need to take a right decision on the kind of space they're looking at, and in the sectors where we are present, I think there are very few quality real estate retail developers, and we are proud to be one of them. So I don't think we'll land up in a situation like that. The bigger challenge is, today's malls are replica of each other. So if you go to a retail development in a Gurgaon or in Noida, the challenge is that at least 2-3 of them in the same vicinity will have the same brands.
Absolutely.
That brings in a challenge of which one will do more. So then comes a factor called size. I want to build the biggest, largest, which would have XYZ inside it, and so on. So that's I think size also will play an important role. Brands will be more knowledgeable in terms of choosing a right location, catering to whether the size of the development fits them or the scale of the development fits them, and the kind of brand that it will have.
Harminder, what's your own sense? I mean, there are of course big proposals, and I'm just going to read out a few. Department of Industrial Policy has actually got Sweden's IKEA group planning to invest $1.9 billion. Slew of applications have been received from this single brand players. So there's IKEA that I've already mentioned, going to set up in the country a chain of retail stores. Tommy Hilfiger, that's another one which is planning to roll out about, how many stores is that? 500 new stores in India over the next 5 years, in addition to about 130 outlets it currently operates. There's Tata Group, there's Starbucks Coffee, we all know about it. So you look at this slew of new entrants and you say there should automatically be a comfort factor for developers like DLF, and I mean Vivek's got a cushy job for the next 5 years, but I don't think it's happening like that,
absolutely.
right?
So one IKEA, one Tommy Hilfiger, another Marks and Spencer, and maybe a Reliance Fresh, and then a Big Bazaar, and you put it all together, it doesn't fill up a mall.
Absolutely.
It doesn't fill up a mall,
That's the important
and that's
point.
where, and it doesn't fill up a mall, and then wherever it could possibly fill up a mall, there are 5 other people who are planning to create another mall there. So you'll have 4 or 5 malls of same size, which all of them thought that if on paper I can fill 60% of it today, by the time the mall is ready, it will be 100%, and there'll be few queuing up. But by the end of it, it's 500% availability, and at 60, with all these follies which are going in the market, at 60 falls down to 50 maybe. At that where I think the numbers start falling apart. So malls are happening. So 240 malls which are operating today, they are coming out of the number which was 600 in 2005, that there will be 600 operating malls in India by 2010-11. So only 240 have come into play. So when they were talking 600, I think they were not even 60 operating.
Right.
Somebody asked me in one of the similar discussions that, can India take 600 malls? And I say India can actually take 6,000 malls. But if all 600 happen to be on Mehrauli Road, Gurgaon, then there's going to be a problem. And then half of them happen to be in Noida, there's a problem. And I think that's the problem which we are facing. And when some of the mall developers, they have gone down from metro cities to tier 1, tier 2 and tier 3, somehow they have made the mistake of shrinking the mall, not playing along with the plan of the brands who are coming in, assuming that everything will follow, you build it and they will come. I think that didn't happen. And
would you agree with that, Jaideep, that just in feasibility, planning, location, lots has gone wrong?
Yeah, I would say that. I mean, if you look at it, out of the 240 malls, 65% are in Delhi NCR and Mumbai, Greater Mumbai, predominantly. And if you look at when malls started launching, it was pretty much investor, it was a sale model. So the mall developers didn't have any control on the trade and tenant mix. And when that didn't happen, you could have an Adidas and you could have a Haldiram next to it, or anything else next to it. So the zoning was out of the window. And so clearly, when I said that very few malls were successful out of the 250, this was one of the key factors, is that the malls were sold out. And clearly on the size, I agree with Vivek that pretty much all the developments are in clusters. So you had 4 million square feet coming into Pune over a very short period of time. You're going to have the same thing coming up in Noida over a very short period of time. A very less breadth of brands in the country. So all the malls look similar.
Look similar. These
So-
are all very, very staring problems.
Absolutely. And
One more point.
Yeah.
They just went, they didn't realize that the design was so flawed that they went G+4, G+5, and there was no demand after the first floor. So the malls were totally empty from second floor upwards.
But I think more than that, it was the issue of zoning. If you zone the mall properly and you design it properly, you can get customers up. You can take care of vertical circulation. But if you have no zoning in place, then it's a challenge, because then customers will predominantly want to be either on the ground floor or at best on the first floor.
So, help me understand, Vivek. I mean, I did touch this with Harminder that this FDI, 100% FDI and single brand retail being allowed, has that given you certain extra excitement? I mean, are you seeing some beginnings of some benefits there in new inquiries? Because if the applications are going to the government, then they probably are simultaneously also coming to developers such as you.
We've been interacting with a couple of international brands which are looking at the country, and they have been on a market visit, and they are conducting market visits now, looking at information on how much we're building and where we're building and what's the time scale. What this whole aggression will help is to also help real estate developers to build more retail assets. Because somewhere during the 8, 9, 10 horizon, they had lost the confidence of building retail assets, because as you rightly said, they were sold properties and there were not enough tenants for those properties, and everything was becoming a replica of whatever was created, no differentiating factor and so on. So once the market opens up, A, there's going to be demand for right retail asset. B, there's going to be the developer will be able to offer the consumer a differentiation factor, which will come in from the choice of the brands available, and the consumer will benefit, because he will everybody we know everybody goes abroad and buys huge amount of stuff. So that stuff available here will definitely help keeping the money here instead of shopping abroad.
Okay, that's an interesting perspective. So let's also get another perspective from a developer. This is actually Lalit Kumar Jain, National President of CREDAI. I actually asked him earlier, what does he make of this entire shakeout which is happening in the domestic retail industry? Does it worry him?
In fact, it's not pain. I would say it's, the first phase is over, where there has lot of learning has happened, and this learning now is taking them to the next level, where they are consolidating where that is needed, but they are also expanding. So I think going forward, there will be fewer mistakes. However, I see a fantastic growth in retail sector in this country, because sheer demand is driving that phenomena, and India is not going to be ever weak on demand side, and therefore coming few decades are the decades for retail.
What about the 100% FDI announcement and single brand retail? Does that also give you that extra comfort and cushion in terms of how the sector is going to grow going forward?
Well, I think even standalone malls require support of a mixed-use integrated mall, and unless we really go in for a complete package, this will not happen the way we want.
All right, so very interesting views. Lots of optimism there, but not that much excitement on 100% FDI. We'll keep, of course, bringing you Mr. Jain's views, who's saying that there's a lot more which needs to be done with the industry as a whole for developers to make a queue or actually queue up to launch new malls or retail space. That's the outlook on the growth of India's organized retail sector. How much of this is driving real estate plans? That's what's coming up next. Keep watching. India's retail growth is a big catalyst for the growth of real estate. In today's debate, we are trying to get to the linkages and arrive at a clearer picture on where retail is headed and how much will that fuel real estate. On the other hand, you read a statement by India's retail king Kishore Biyani, who says to realize the true potential, we need 200 to 300 million square feet of retail space. That will be a key challenge. So I'm going to come back to that point. We look at some of the data points. It almost seems to me that it's a chicken and an egg situation. The retailers are claiming that there's not enough good real estate space, and the real estate developers are finding it difficult to fill up malls.
Right.
So what's happening?
See, clearly one is this, like we discussed, the locations, where the malls are and where the retailers are hunting for space. That's the big difference which we are seeing. And the pricing, we were talking about international brands earlier, talk to 10 or 15 top retailers in the world. Some of them are already here, and most of them are wanting to come here. And if you ask them one single reason because of which they are hesitating in coming to India, it will not be FDI. It will be the real estate prices. Prohibitive.
So expensive.
Prohibitive. They say that it's so expensive, and not having started business in India and having looked at some of the players who are already here, they now have some benchmarks that how much sales they can generate from a particular store. So overall India could be a $1 billion opportunity for me. But just by having 10 stores of Zara, can I capture that? No, I have to have 150, 200, 300 stores for that. Where am I going to open those stores? And the prices which I have to pay for that real estate, will I be able to generate any kind of profit? So that comes number one. And I'm saying it from the experience by talking to these people every single
You're working with a lot of them to bring them to India.
3 of them have stalled their plans back in 2010 only because of the real estate prices, the way they were. Because they wanted to open their stores in maybe in Orbit Mall in Bombay, Forum in Bangalore, Mantri in Bangalore now, and maybe Saket or MB Mall in Gurgaon, but all these places are full up. You can't get in, and if somebody is getting out and you want to get in, the premium which you have to pay is amazingly high.
So who's making money in the malls? Vivek?
I think the retailers are making money. So they are the good malls, and then they are the bad malls. So good malls, retailers do make money.
But the premium, as Harminder put it, is huge
actually,
to get into those good malls.
It depends upon what kind of an arrangement you have with the brand. So if you have a minimum guarantee and a revenue share component attached to it, then both the brand as well as the developer makes money. Yes, there have been instances wherein a lot of developers have gone rocketing, saying that the rentals are 1,000 rupees per square foot or 1,500 rupees, 1,200 rupees per square foot on carpet. That doesn't make sense, because it's very important for you to understand the retailer's business, because at the end of the day you are in a service industry as well. So if the retailer does well, your mall does well, and so does the customer comes in. So that's very, very important. Understand the retailer's business and partner with him so that you guys can make money together.
Much easier said than done. And when Vivek says that what kind of arrangement you have, and he makes it sound very nice that you have a minimum guarantee plus revenue share model. What it does is that I have got a fantastic model in one of the DLF malls, and I make a lot of money there. Because the revenue share, I leave it all here, and I have to fund my other store on my own again. As a business, I don't get the money because I have shared it all here. Because this one does well, I leave this money behind and go and open a store and now figure out another model somewhere else. While I should be the one as a retailer keeping all the money and risk it elsewhere and fund it for a year or two, and so that store starts making money. Everywhere I'd see there are small follies which have come in, and it's created huge amount of imbalance in the chain. So money is definitely being made by the retailers as well as the real estate developers, but at very few locations. And the retailers, they're also only making money if they had blocked that space when the mall was to happen, when it was being booked or when it was being reserved. If now you want to enter once it is successful, that's how it should be.
Santosh Pandey, Vice President, Growel's 101 Mall, joins us now from the Mumbai studio. Santosh, very interesting debate here. It's a chicken and an egg situation. We've established real estate players saying that, look, we need to extract our cost, our price. It is getting very expensive to develop malls. Retailers say we don't make money because it's not actually easy to make money after paying that kind of high tenancy price in malls. What's your view on it? I mean, what kind of pricing model should be followed?
There's definitely a challenge in terms of retailers making money in the malls. I mean, there are various models available today. They are no longer only a fixed rental model which works for malls, because you need to have profitable retailers inside your property. If you have a profitable retailers, it's when the message floats across the market that you can make money from a certain mall. And that's when you can get better retailers coming to your property, and you can cater to the customers' needs that way. Yes, it all depends on the property, how is it located, and how it's being managed.
Okay.
Location is not the location. Yeah.
So location is very critical. I think one clear point which is emerging from this discussion, but let's just go to data points and see what's happening. I mean, how much real estate space is really coming into the market, how many malls are coming into the market. This is Prop Equity data, which shows that if you look at 2009-11 and then compare 2012-14, let's begin with NCR. All other big cities, actually, other than NCR, have seen a drop, isn't it, Sameer? Big drop. MMR is down 45% in terms of supply of malls. You have Bangalore, which is down 3%, Kolkata, which is down 5%, NCR, where Vivek, of course, has a big mall coming up, 2 or 3 of them, right? Is up 23%. So pretty much we have to now make sure that DLF goes to the other cities. But comment on that data point in terms of the fact that 2009 to 11 versus 2012 to 14, you actually are going to see a fall in mall supply. Is that because they're worried there won't be enough takers?
Yes, first of all, these data points are from 2009 to 2011. We also have to take into account data points which with respect to 2006 to 2008. I'll give you a small example. Noida came out with 1.9 million square feet in 2006 to 2008, and then suddenly 9 to 11 dropped to less than 300,000 square feet because there was no demand.
What you're saying is that 2009-11 is already subdued figures compared to the previous period, and now we're going to see a further drop.
You have to take those into account because 2006 to 2008 plus 2000 to 2009 to 2011 led to a huge oversupply situation. And because of that huge oversupply situation, and there was no demand, and plus we went through the subprime crisis, funding totally dried up, private equity funds were just not interested in even looking at the word retail, forget wanting to talk a business plan on a retail mall. The funding completely dried up and the developers started to lose money. And because the malls, 80% of the malls were not doing well because of wrong product mixes, they didn't have deep domain understanding of how to run a proper mall, the mall just lost the flavor. And that's what you're seeing in 2012 to 2014. I'm still surprised with these numbers that there's enough supply coming up because probably it's pre-committed. And there are a lot of risks that are being taken even right now. And I'm not too sure whether a large number of these malls will be successful or not. I also blame the developer a little bit because you know what happens is the developer comes out with this super 2 carpet area model in a mall of 100% efficiency. So if you're giving 500 square feet carpet area, you charge for 1,000 square feet. But the developer actually what he does is that super area, he utilizes it and rents it out on a daily
to everybody. There are n number of kiosks.
And then he puts hoardings outside. So he makes a lot of money with respect to the super area of the place, but doesn't pass on the benefit to the retailers. And eventually the retailers will start bleeding. And then the product mix will go bad.
Jaideep, how much of that would you agree with the fact that the numbers aren't looking very good, not very encouraging for developers to actually get aggressively into new mall development?
See, in terms of rentals, I mean, I would disagree to a certain point about rentals are going to fall. I would say that
they are falling for the last 3 years.
I know, but for quality retail space, whether it be in high street or be in shopping centers, rentals are actually firming up.
They're going through the roof, but very few places. That's what I say.
It's firming up, and that's what I'm saying about that. There's going to be a major polarization, where it'll exaggerate the situation where rentals will keep on going up for quality space, and there'll be no takers for not so quality space. Forget about lower rentals.
So how do you actually, Harminder, define that quality versus non-quality? Because if I go to a US, I'm willing to travel 20 kilometers, actually even more miles. You could even convert it to 30, 40 for these absolute hyper malls. That ain't going to happen in this country. So again, I mean, how many malls can you have in MG Mall or in Worli, in Mumbai? So how do you get out of this tricky situation?
See, compared to the, I would say, Western markets where people first traffic situation or the travel on the road is pretty comfortable and they are quite used to doing it, and it's happened over years that the suburbs happen and the out-of-town malls happen. So it's taken their time to evolve to that extent. And during the same period over the last 70, 80 years, the small mom and pop stores and the neighborhood markets, they have disappeared because the neighborhoods disappeared. Everybody was not living in town, people started moving out, and then so you have cluster of developments, and we are in India, we are moving completely differently. Anywhere, whether you go to Italy, whether you go to Germany, whether you go to US or whether you go to UK, people live in apartments in the town and they live in homes and outside suburbs. In India we do the reverse. So in Delhi, we live in bungalows, and when we go to Gurgaon and Noida, we live in apartments.
It's completely reversed.
Completely reversed. Completely reversed.
That's a very interesting thought.
That's how you need to look at Indian market. And I think ever imagining that people will start going to the malls outside and start shopping, there has to be a compelling offer. And somewhere the compelling offer actually is far more attractive nearby in the neighborhood markets, because these are survivors. These retailers, they are businessmen on their own right. So they are doing everything possible. Refurbishing their stores, the product mix,
to home delivery, they're
everything.
matching, in fact, they're doing more than what organized retail is doing in some cases. And then, of course, you have e-commerce to contend with, but that's another big point.
Yep.
I also spoke to Lalit Kumar Jain and asked him this question. Is he worried? I mean, as for the developer community, does the downturn worry him?
On the contrary. See, retail is definitely a very micro market kind of product, and it requires a lot of scientific research. So retail is not a product which every developer can really look at. And last few years it has been very what you call little hazy, and we are not clear on FDI in retail, etc. Plus it's not moving the way it is expected to move in terms of new spaces, and leasing is going very slow. So I think retail will happen, but it will happen at its own pace, and it will be location specific.
Vivek, what are your plans? I mean, DLF, largest developer in the country in terms of retail space, what are your plans? Would you go slow the way Mr. Jain's saying that, indicating it's going to be a cautious journey from here on?
I think, our plans, frankly, we're building close to about 2.5 million square foot of retail space in the next 3 years. Yes,
those projects though were announced earlier, isn't it?
No. These are new projects which are more segmented on a certain sector. So we have an F&B concept which is coming up in Gurgaon, which is only catering to the F&B needs of a certain market. We have a family retail development which is coming up in Noida, which is close to about 1.7 million square foot. That should be operational by end of next year. And we're extending the Emporio brand to Gurgaon as well. So that's something that people are looking forward to.
All NCR, but Vivek,
all NCR,
no plans to go to tier 2?
We have land, but I think we have lot of square footage on the plate right now to finish and then move to different markets.
Jaideep, tier 1 versus tier 2, why is, you made this point at the beginning of the discussion that most of the mall growth is concentrated in tier 1 cities. What will take developers to actually go to tier 2 cities? Because, I mean, FMCG companies have such an aggressive push for rural market, for tier 2 markets, but we don't see that happening or turning into organized retail anytime soon.
See, it will happen. I mean, it's a question of time. Urbanization is happening. There's more education awareness in tier 2 cities of brands. So it's a question of time. And but now, especially after the last 6 years, where developers are now cautious with what has happened over the last 6 years, they need to really carefully plan their next project in terms of size, in terms of return, in terms of what trade tenant makes. So it's going to be a much thought-through process than what it was earlier.
So cautious is what it's going to be. Absolutely. Santosh, what's working for your new mall? I mean, it's in Kandivali, suburbs of Mumbai. How have the footfalls been? Share with us some of the experiences in terms of successes and the weak spots that you've seen so far.
What we have done is we have been very closely working with our retailers during the tough time in understanding their needs. Something which is very important for us to understand while we have this debate on the rentals and the occupancy is the occupancy cost is something which is very important to be looked at today. It's no longer just the rental. It's also the common area maintenance cost. It's also the cost that you pay for the electricity and the HVAC for a mall. So all that factors to your total occupancy cost, which if goes up beyond a limit, and if it goes up beyond a threshold, becomes difficult for a retailer to start doing business in a particular property. So to understand where you can do a good cost control, to understand that you keep your cost under control, you keep retailers aware about the things that you need to do. Your marketing spends has to be very carefully chosen and done. Something that definitely from the day one we have been taking care of that in our property. We have kept our cost under control. We have tried to do a deals whether it is going to be beneficiary for the retailer to make business from our property. We have done a lot from the customer service point of view, because if you see, there's a few brands which you will find in all the malls. You know, if you have to choose, you will have all 250, 300 major retail stores in the country today, and if you go to a good mall, you might see them in all the properties. So what makes a customer to go to a property A and not to property B, or feel like spending in a property A and not in property B, is the other value added services that he gets. While we compare ourselves with the malls in US or UK or maybe other places, I don't think the customers or the retailers are looking something exceptionally different in the property. I think what they're looking for some basics. I think it's not all about the fittings that you use in the washroom, but it's all about how do you maintain a washroom. It's all about how do you take care of the customers. How do you manage your senior citizens and handicapped customers when they come to your property? How comfortable are their kids and the family members when they come shopping inside the property? So I think these are things that's definitely very important in future for any malls if they want to have an advantage over others, and if they want to cater to more and more people in the catchment area. I think this is going to be very vital, and this is exactly what we are doing at our property in Kandivali.
All right, so mall design is again a very large topic of discussion, but location, as Santosh says, is not always critical. Sometimes you can just create. I do think everybody's looking skeptical here on that point of view. Location, location, location. I think in retail, that's something that I've read in every book, every article.
You know, the key point here is that if you, like what he mentioned was that you don't have such a good locations, but you have brands which create a destination.
Yes.
But the key is that if you have a mall which is a good location and has all the same brands, then where will the customer go?
He will go to the better location.
Yeah. So location is very important.
Saket, there are the biggest, best three malls are there. Select City Walk does the maximum business and has the highest rentals, and there's no shop that is vacant, and you have DLF and you have MR,
which have caught up now though.
Which have caught up, but they are at half the rates, and there's still enough vacancy available over there.
Well, I must tell you, Samir, from a shopper's point of view,
I beg to differ on that.
Okay, Vivek, and I will be on Vivek's side, because now I feel suffocated in Select City Mall.
Thank you very much.
It's so much nicer to go and shop. Though I still have to come for a Zara in
Select City Walk.
We'll get you Hamleys there, don't worry.
It does make a difference.
The point that I was trying to make, that you have three malls in the same location, but mall management is more important. Creating a destination is more important than just purely the location.
And mall design.
And mall
design.
Yes,
that's the only point I wanted to make.
And you do see sometimes adjacent malls, one does extremely well. Of course, a lead factor could be the brands which are there.
Because when you have the first mover advantage, you tend to get best brands.
That's right.
That's a very important.
It just sticks in the memory of a shopper. That becomes a favorite place. It becomes a familiar shopping zone, eating zone, and that, I think, the first mover advantage is very important.
Yeah, but the advantage that we guys have is we can offer the newer brands which are coming into the country. So that's a novelty that we create.
So you are agreeing that there are some empty spaces?
Well, not really, not now.
Because I haven't seen any.
Very deep pockets as well.
I know.
I'm just putting a point that we'll have newer, fresher brands.
Absolutely. I mean, there are always two sides of a story. We're going to come back. I mean, we've discussed, looked at mall management, what works, what doesn't work, but industry estimates say that of the 200 odd operating malls in the country, barely 50 make money. Then why would investors put their money behind retail development or mall development? That's something we'll come back and ask our experts to lay out in just a moment. Industry estimates say that of the 200 odd operating malls in the country, barely 50 make money. The rest have high vacancy levels. Absolutely clear why developers are going to be cautious or tread cautiously in developing new malls or going aggressive in this space. So what's going to happen to investors? Recently we had a report that Xander Group, Harminder, is looking at putting in a lot of money in retail space development. But is that a one-off story? Because Samir had mentioned this point. I'm going to go back to him. It's not a business where they can expect to make money in a hurry, and probably not attractive to them.
See, when you look at people like Xander, or even if you look at some of the developers from Capital Land, which is a large Asian mall management company, see, their business is malls. The business is retail real estate. So they don't have an option that can I make apartments and sell it to investors, or can I make a give it to Fortis to make a hospital, or can I make a hotel and give it to Hilton?
They just have to stay
they
with
just
retail.
do malls. So that's the kind of companies which one was expecting will emerge out of Indian real estate developers. That some people will choose to, or some of their divisions will choose to become mall creators and mall managers. Hasn't happened. So whether for DLF or whether for a Hejaz or whether for a Mantri, it always remains another one of the real estate developments. And every single time they look at a plot of land, few acres or few square meters, they look at it and they decide what to do with it. Xander doesn't do that. Xander picks up a plot only when they're very sure that they are going to create a mall and manage it forever. They don't do leases below 30 years, or they don't do agreements which run out in 3 years
But
or
will
9
that
years
model
time.
work in India?
That's the model which has worked everywhere else, and this is how it has to work. Because that's the reason when you'll create a brand and you'll say that now I'm going to take it to the other cities, not wondering wherever I have the plot, that's where I create the mall. So that's the difference between the real estate developers becoming mall creators versus mall managers coming in and saying that we create a mall because we have to manage. And the big issue there is that the FDI in real estate doesn't allow all these international mall managers to come and buy into existing malls.
Okay,
So
they
they
have
can
to
only
create
come
new
into a
ones.
certain size and they have to come into a fresh project. So if they were allowed to do it, I'm very, very certain that somewhere in DLF management, somebody will say that unbundle it, bring in an FDI, give it 60% to the international player, let them grow.
You
and
think-
then cash
you
out
think that
billions
will
of
happen?
dollars in that.
I don't think so.
I'm sure you would be considering it, or no?
Well, we're quite serious about the retail business, and we would like to develop a quantum of retail assets first, and then move forward.
So maybe not for such large developers like DLF, but for smaller developers, it makes perfect sense. I mean, to get mall management right, Sameer, is going to be a tough challenge. And you said P Money isn't chasing this business at all.
I'll also share with you that I know of 2 real estate private equity funds that specialized in owning retail malls across the world. They were one of the world's largest mall development companies. They came to India, explored it for 2-3 years, shut shop and went back. Because they just couldn't find the right locations, and when they found some locations, the pricing was so high, it was just not feasible for them to do a successful mall development over here.
I think people aren't being able to put their finger on the pulse or just figure out that if they didn't get the right location or the right land, how do you make a success of a mall, Jaideep? I think location is becoming the biggest challenge. Land in the right place is the biggest challenge.
Right price.
Yeah,
Right
absolutely.
place, right price, both.
I mean, location is linked to a catchment area, and that's where the target consumers are. So it's linked to price and obviously location. So clearly, but a point to this is that there are developers who are looking at mixed use, where you have retail development mall, you also have residential, you also have office, you also have hospitality in the same
That
vicinity.
model will work better?
Yes.
Harminder, do you think that will work?
But how many people can do that? Customers are somewhere, and you are saying that because we cannot make malls work where the customers are, or maybe it's too expensive to do it, let's go somewhere, create a completely new city or a mini city. Obviously, every city needs a mall, and I'm sure it will work there because if there are 10,000 apartments and 50,000 people living there, a mall of 500,000 square feet will work there. But that's not the answer for organizing what we are talking modern retail for the current India, existing India. That's for the new India, which
I
we are
think what
talking
people
about.
now are developers smartly doing is that they do limited retail, then they do office on top, or office retail complexes, or office or retail hospitality complexes, which is working because they're being able to utilize the entire FSI of the land and make the asset more productive. And that's why if you see the Ambience mall, that is what they've really done and become very successful at it. And that's what the developers are moving to, because it's very high risk to just do a pure mall development and lease out 500,000 square feet or 1 million square
just
feet.
retailers.
But it's very easy to lease out the entire ground floor, which could be about 100,000 square feet, and do mixed land use development or do hospitality, service apartments, or office on top.
Yeah,
That
but
is the formats that I see happening going forward.
Vivek, hold your thought. We're going to come back. Very quick break. We'll be back. And we're going to conclude because, I think this debate discussion has led to many more questions. Answers have been there, but I think there are still a lot of question marks. So we'll try and conclude in terms of it makes business sense, and when does it make business sense for developers and real estate industry to aggressively look at mall development. Keep watching. Can retail growth be the catalyst of real estate growth in the next couple of years? That's where we started this discussion and came to the conclusion that retail growth itself needs a lot of assimilation, organization before it can be the main catalyst for real estate growth. But coming back to whether developers will or should look at mall development in an aggressive way, Vivek, what's your point? Do you think formats like mixed use might make it a lot more lucrative and attractive for developers to get into the business?
Yes, it will. I think it's very important as market leaders to take initiative and build retail assets, and that's what we will do. There
You're saying that you will continue to be aggressive in this business.
Yes, we will. And there could be, a lot of developers make a mistake of having 5 top brands like a Zara or a Promote or a Mango or a Nine West in a retail development. So all retail developments or all malls are not these 5 brands. They are much more. So there could be, you could come up with factory outlets, you could come up with discount stores, which is prevalent. So you should look at newer concepts, and that's what will also take care of your complete asset that you create. So there could be factory outlets, you could create an F&B destination, you could create family retail destination.
Innovation is the need of the hour. I mean, look-alike, Me Too will not do well, Harminder.
Absolutely, and I think that's the call. I would say the call of the time right now, that people have to look at it differently, they'll have to look at it creatively. But the point which I would definitely make is everybody talks about FDI in retail. I think FDI in the retail real estate, I think will be the biggest enabler. It will bring down the cost, it will bring in the quality space, it will bring in the long-term players, and that will lead to the growth of organized retail in a much more structured manner.
Very interesting point. Santosh, any plans for new mall launches?
Yes, why not? We have 6 lakh square feet mall today, and we are looking for expansion in the phase 3, which will add up another 4 lakh square feet, taking up to be a 1 million square feet mall. Just a small line that yes, there is enough demand in the market for quality development, for quality management and quality malls. The retailers are positive about the whole scenario. It's not something that we need to be worried. When we talk to retailers, they are very positive about going to a quality retail destination. I think it's all about what size that you want to create, where do you want to create, and how do you want to mix up that mall. Sometimes malls has been always been thought over that when you talk about mall, it has to have high brands catering to a certain section and beyond categories. Yes. But yes, you can have mixed developments where you can have factory outlets, you can have mix of anchors and mini anchors, and if there's enough good quality retail space available, yes, the developer as well as the retailers will definitely make money from real estate.
Okay. Last word in, Jaideep. What do you think? I mean, what's the outlook in terms of how aggressive will developers be in the launch of new mall supply?
See, I think there's been a lot of learning, so the outlook will be positive. I do see a lot of international brands looking at India. India is a country they cannot ignore, given its growth rates. So once a lot of international brands come in, it will lead to developers having more confidence to build quality real estate space. And as the group has said, the development has to be relevant to the target consumer. So it doesn't have to have the top 5 brands. It should be relevant to what the consumer is walking in.
And new formats, innovations, these will work.
Skating rinks and different types of USPs each mall is doing. So it's going to be positive. I see that as a very positive development.
But money is still far away. Long gestation period, and you don't think money is going to be made in a hurry in real estate?
With the current situation in the real estate markets, I don't think retail is going anywhere for the next 2 years.
But that way, other than residential, nothing's going anywhere.
No, I think office has done exceedingly well in Bangalore. So you have to look at certain cities, and I think there will be growth in commercial all the time. There will be growth in residential all the time. There will be growth in retail also. But there is just so much supply that has come in, and so much more supply that is going to come in the next 2 years, that I think retail is not up to taking that kind of space. So I'm saying it's still growing. 2012 is going to witness 12 million square feet coming up, which is the largest amount of square feet that has ever come up in organized retail.
Right.
So I'm not saying that it's not growing, but I'm saying that going forward in the next 2 to 3 years, the growth is not going to be, growing compounded by 10, 15, 20%. It's going to be muted.
All right, gentlemen, thanks very much. Santosh, pleasure to have your views. Harminder, extremely insightful viewpoints. And Vivek, all the best with your business. Hopefully you will go to tier 2 cities as well after you complete all your projects here in the NCR. Jaideep, thanks for bringing in your insights. And of course, My co-anchor, expert co-anchor, always has extremely insightful ideas. Data points which tell a whole lot of story. That's it from us today here on the Big Realty Debate. Yes, we'd all like to go out and shop in nice places, great places, but it has to make a lot of business sense both for the retailers because they can't buy or lease out very expensive space. Real estate developers also need to make money. So it's a painful period, but something that nobody is backing out from right at the moment. Everybody is looking at India growth, giving them great opportunities. Thank you very much for joining me today on the Big Realty Debate.